What's good, YouTube? It's your boy Zay, and welcome back to Setup Sunday. Now, let's talk about last week. My goodness, the market went on a tear, and all our levels got blown out the water, meaning we hit all our targets and went higher. So, I cannot wait to dive into the charts of the week and see where we're headed in the direction of where we'll be in a couple weeks. I think you guys are going to really enjoy that. Now, for the lesson of the week, we're going to get into Fibonacci retracements. So I'm going to show you like how I place it on the chart, how you can use it, all that good stuff. So I really think you're going to enjoy today's episode. And as usual, we'll get into our hot topics of the week. We'll review our charts for the week and all that good stuff. So if you enjoy these videos, don't forget to press that like button as well as subscribe to my channel. Don't forget to press the notification bell so that way every time I do put out a new video, you are in the know. So without further ado, guys, let's get into it. All right, guys, so let's start it off with the hot topics for the week. Earnings season is about to get underway, and that could be a positive catalyst for stocks. So the key things we need to pay attention to this week, okay? Banks report this week. Banks typically tell you how the economy is doing. So we need to pay attention to what these earnings reports look like as well as guidance. Now, we do know that banks should be able to offer buybacks and maybe increase their dividends by the end of June based on the restriction or that I believe it was a restriction or a lifting of restrictions by Fed Jerome Powell on banks, allowing them to, repurchase their shares or increase their dividends. So that'll be something we really want to pay attention to. The second thing we want to pay attention to is going to be that consumer price index that comes out Tuesday. Now, this is important because on Friday, we had the producer price index come out and it was showing some signs that, hey, we're beginning to run a little bit hot. So investors will be paying attention to this consumer price index to see if there's any signs of early inflation coming, and that could kind of spook the market just a little bit. Not expecting a crazy pullback, correction or anything like that, but maybe a small pullback, like 1%, something like that, especially after the big week we just had. And we'll get into that later in the video. But other than that, guys, those are the main two key events. So we're heading into earnings season. If you check out this article down below, it gives you a really good week ahead calendar. So as you can see, not much really popping off on Monday. Tuesday, you have some earnings as well as the CPI. So that consumer price index report we talked about comes out at 8:30. A few looks like Fed webinars. Wednesday is when the banks report. So definitely JP Morgan and Goldman Sachs. Shout out to Goldman Sachs. Y'all know what it is. And then on Thursday, you got Taiwan Semiconductor. That's going to be big. So watch out for them. And then you got some more banks reporting as well. And then as far as I believe it's Friday, consumer sentiment is the big report you want to be paying attention to. And then as well, you got some big banks reporting. Also watch Kansas City Southern, with industrials being real big. I think they believe they got bought out. I'd be really interested to see what Kansas City Southern does. So that's pretty much the hot topics for the week. As you know, I do have the link to this article down in the description of the video if you want to dig a little bit further into this article. But those are the things that have been highlighted for the week for investors to pay attention to. So y'all already know, let's go ahead and switch over and let's get into the charts for the week and see how this lines up with the economic data and the things that we're hearing. All right, guys. So now we are on the Nasdaq chart. Now, mind you, last week, I believe the target we set was about 13,680, close to 13,700. That's where I said, hey, that was going to be one of our resistance levels. I personally thought that would be as high as we got for the weekly candle. However, you can see we simply had an amazing week and we did 3.1% on the NASDAQ last week. So huge green candle. We did come fill this gap. I did mention, I think I mentioned that before, that 13,876 was, one of those levels to pay attention to. So if we add our resistance here at 13.9, what does next week look like for us? Realistically, and you can see I have my trend line here, I do think we have a bit of a cool off period. If we don't have a bit of a cool off period, meaning we could see somewhat of a tiny pullback to about, I'd say, I'm gonna bump it up to about this right here. So we should be up in this area. So that's going to be about 13,885. So that would be the area I'd be paying attention to if we did pull back a little bit. However, let's say earnings is great. We could see us in the week somewhere around 14,100. So when we get to our daily chart and kind of break it down, you can see there is some slight gaps up in here. However, when we look at the past data of what happened, early on in the year when we got into these levels, you can see there's not very much resistance. So, what we can assume is that maybe we do push up to this 14.1 and then we get somewhat of a sell-off or somewhat of a pullback like this. Or we really could just get a slight 1% pullback. We touch right up in here to kind of confirm this is support, and then we bounce and we continue up, and then we maybe finish the week around 14,000. So, because we had such a big run, it's kind of tough to gauge how next week's going to go. Typically, you have a little bit of a cooling period before you get into earnings season. So definitely something to pay attention to on the Nasdaq as far as levels. So as we said, just to recap, I'll be watching this 13, roughly this, let me just kind of tighten that up, that 13,735 as far as for a pullback. And then we have, of course, we opened here at 13.9, so we could push up to this 14,000, maybe even 14.1 before we get somewhat of that pullback. So just be mindful that the 16th of April is the expiration month or is the expiration date for April contracts, and typically you'll see those contracts close out, so you could see some volatility. So that's the Nasdaq. Let's get into the QQQ. So for the QQQ, again, let's go back to the weekly. Our levels got blown out the water last week. I'm pretty sure I set my level around 329, and I said, hey, we could get as high as closing this gap, which was put us at about 331, 332. And my God, did the QQQ have a great week. We actually finished the week at 337. So we now are at the top of the bands, and you can see we actually closed above our all-time high. Well, not our all-time high, but our previous closing, which was 336.45. So what to watch for next week? I don't know if the QQQ breaks out and goes higher. I think we do need to have a little bit of a cool off. Again, if you look and you see these gaps and just how high we ran, I could, I'm really looking to see the QQQ pull back, maybe down to this 331, which would, and if we put that on April 16th, that give us somewhere about, like I said, a 1.8% pullback. So nothing crazy. Just a quick little cool off period. It could kind of be choppy and slow, low volume, but eventually we want to work our way down to about this 331. And then here is going to be a great buying opportunity, because I believe the weeks after, going into May, we could see the QQQ get all the way up to about 350, 345. So that's definitely something that we'll be watching over these, next 3 weeks. So for this week on the QQQ, I am a little bearish only because we had such a huge run up, but I'm not like overly bearish. 1.8% pullback, if that, just to tighten this up. And other than that, that gives us the clearance to keep going further. So that's the QQQ for the week, guys. Those will be the levels to pay attention to. And so just to recap, I have resistance. Let me just make sure I add this. So I do have resistance at this about 338. Right here, we could push, as I said, a little bit higher, maybe get to say 340. I think 340 could ultimately end up acting as, if we do just jump, and then from 340 we get a little bit of a pullback. So just watch this candle. So you can see last time we got up here, we did pull back to about 329. I don't think we'll get as low as 329, which is why I said the 331. So for the QQQ, that is what I'll be looking to see, is that we open somewhere up here, and you could probably short it down to about 331 for the week. If we don't, then hey, you know, further movement to the upside. And I'm thinking 345 to 350 again by the end of the month. So that's the QQQ and where we're at. So let's get into the S&P 500 next. So the S&P 500. So we look at this chart again, our levels got simply blown out the water. I feel like I'm gonna say that every single time because for that, I'm pretty sure I had my level set at around 40.50, 40.47. That's what I was looking for. And we climbed all the way to 41.28. That is where we ended the week at. So you can see there's a small gap here. Now, I don't think that gets filled this week. So ultimately, again, what I'm looking for from the S&P 500 this week is just a slight cool off. So just something slight over this next week, nothing too crazy. If I go to the 16th where the expiration date is, and I go down to say this 40.50, that gives me about a 1.8% pullback, which is something small, nothing crazy, just a little give back. And then from here, this will be another good entry because again, I think by the end of the month, the S&P 500 could climb to about 4,200. So we could be in for a really good month. So the levels to pay attention to on the S&P 500, just to kind of fill you guys in, and I'll add some more support levels just in case. So just know there is this gap right here between 430 and 420. However, I will look for support at 450. If that doesn't hold, then very well, you know, we could see, we could get some support or buying pressure right here around this 4,016. As far as resistance, I do believe that, you know, this is resistance, this 41.35. So we could get a little bit of a push, maybe even to what, say 41.50 over the weekend. And then from here, that would trigger a pullback. And then we kind of just slide down to about this 40.50 into Friday. And then from here, we get a bounce and we head to 4,200. So that is the levels that I'll be watching on the S&P 500. Let's get into the SPY. So SPY, yeah, SPY, we got smoked out again. Well, not really smoked out. It's just that I think for the numbers we had, I think I did 404 was my target last week. And as you can see, we opened at 403 and simply blew it out the water, went all the way up to 411. So I like to under promise, over deliver. So this was a big beat though. That was $6 over. So if you had some calls on the week, you would have done pretty well. However, going into this week, what I'll be paying attention to, once again, you see we do have somewhat of a gap here at this 400. So what I would like to see, or what I think happens is, again, we get somewhat of a small pullback, right? To actually, I need to change this to the daily so you guys can see it. And I'll actually make this resistance at about this 412 or so. And if we go to a daily chart, you can see that if we get and we go to Friday, which is the 16th, and we get back down to that 404, that puts us at about 1.7% on a pullback. So I don't think this gap gets filled. Not this week, maybe June or September will be when this gap looks to get filled, and that will be caused by like a bigger correction or something. But for now, I think we have just too much upside momentum. So we might get a small cool off, and then we bounce to I have the SPY actually ended at about 420 by the end of April. So going into May, you could see the SPY head into about 420, 425 is what I'm thinking. So, but for next week, the levels to pay attention to is this 412 to act as resistance, and then we kind of get a pushback down to this 404, maybe even 405. That was acting as support for a little while, and then from there we bounce going into the following week. So that is the SPY, and now what we'll go ahead and do. By a request, I had somebody actually asked to include the Dow Jones. So if you didn't know, DIA is a Dow Jones ETF. So you can actually, this is tradable. And so this is just like the SPY or the QQQ, but this tracks the Dow Jones. And so since this is new, let's go ahead and just set up our chart real quick and see where our levels of support resistance are. So let's go ahead and change it to our line, like you know how we do. That's the ultimate cheat code. And as you can see, we got definitely we got a level of support here at this 309. And then ultimately down here is like right around where we broke out. So definitely want to do this 292 area. And then we have probably some more support right around this 315. And then we could add one more at this 325 because as you can see, we simply have just blasted off. If we change it to the candles, now you can see how beautiful it fits. Let's just tighten this up. That puts us at 316. We'll tighten that up a little bit at about 309. And then as you can see, there's some space down here that probably could be cleaned up a little bit. Now, I'm not saying we're going to correct all the way down to these areas, but there's, it's just the structure is not there. So that's something we want to pay attention to. But anyway, not to go too long. As far as next week for the Dow Jones, what to pay attention to. I do believe that this 338 right here will be resistance. And so again, if the Dow Jones just tracks what every other index is doing and gives us our pullback, I definitely could see us pulling back. And maybe even on the Dow Jones, it might be a little bit steeper. So maybe about 3%, maybe 3.5%. If that will put us at about 326. Now, I do believe we'll just more or less just close this gap and hit our 20-day moving average, which gives us about 2.5%, which will put the Dow Jones at about 330 or the DIA at 330. So that's what I'll be watching, guys. I want to see this DIA ETF open Monday at about 338, and then through the rest of the week, kind of just slowly drift down or touch back to 330, and we close the week somewhere around 333. That would be pretty. That'd be pretty well. So that is the Dow Jones. And shout out to the person that asked me to include it. I forgot, but that's the Dow Jones. So let's get into our U.S. 10-year Treasury. We have been tracking this, and look at that. If you look at our weekly, I think last week, the level we said to pay attention to was the 1.62. We did come down and touch it, but now you can see it's just trading sideways. If you look at, up in here, it's going to be real choppy based on history and historical trends. So we had a smooth ride up. Now it's just going to be pretty choppy. Again, nothing to worry about until we, push through this 195 and start to go higher. For now, it seems like rates are starting to calm down and we're getting some choppiness. So again, U.S. 10-year Treasury, just something to watch. Again, it's not so much the rate or the level. It's going to be the speed that we need to pay attention to. So we don't want to see another crazy run up like this because that could spook the market. So we want to see a nice, steady, slow rise, some consolidation. So for next week, that the U.S. 10-year Treasury just stays pretty much within this zone of, and if we just use the Bollinger Bands, we could say, what's that, 1.58, and go no higher than the 174, 175. So let me just add a new resistance, dynamic resistance here. And so that's going to be the trading level for the U.S. 10-year Treasury. And that's what we want to pay attention to for the U.S. 10-year Treasury. So with that being said, let's get into the VIX. So the VIX, again, it is showing that the market is normalizing. I do want to point out how we talked about this gap earlier in the series. And if you would look, we have officially closed that gap. We have officially closed this gap right here. We did hit a low of about 16.2 on the VIX. And so, it just looked like the VIX is steady calming. The market is coming back to normalization. So as we go into next week, what I would actually be paying attention to on the VIX is a slight pop. Just a slight pop. And the reason why I say that is because we did get a hammer here. So we could push up to about 18. I don't see us going no higher than 18.8 on the VIX, if it even got that high. And again, the reason why the VIX would pop like that could be due to that consumer price index number that we'll be getting on Tuesday. And when the VIX goes up, that means the market goes down. So that's the reason why we want to pay attention to the VIX. If the VIX is rising, that means the market is probably headed down. And so this is the level to pay attention to. The VIX has been trading under 20 for a good while, which is a great sign because, again, it signals that the market is normalizing and that we're getting to normal activity. So for the levels on the VIX, not going to change that much. As we can see to the downside, we got 16, we got 17 we need to hold, and then 18.8 to the upside. So That is the VIX, guys. So let's get into our last two charts, and then we'll get into the chart of the week, and then we'll get into the lesson of the week. All right, so Bitcoin, guys, Bitcoin. This is a daily chart. Let's get to our weekly chart on Bitcoin. Last week, we talked about it. We needed Bitcoin to hold this 55,000, and we could see it shoot up to about our 60, 61 and head to 65. So at the time of this recording, as you can see, Bitcoin is officially at 60,444. So it's climbing. I think once we bust through this 61, it's a wrap. We're headed definitely to about 65 plus. The bands have us aiming to basically 70K. 70K. So by the end of the month, could we see Bitcoin at 70K? That's going to be the question. So for this upcoming week, on the week of the 12th, we could see some more sideways action between 61 and this 58. That's probably what we would want to see hold, is this 61 to 58. If it breaks 61, we're definitely looking to go to 65. And so, yeah, Bitcoin's chart is looking very solid. You know, you get a pullback, you get a nice run, you get a pullback. Now we're getting some consolidation. So ultimately, what we would want to see is a nice push through, break through 61, and that pushes us to about 65. If we can't get through, then as we said, we'll basically want to see this 54 where our 50-day EMA hold, or we will come back down to about 50. So it seems like we could be stuck in a little bit of consolidation phase for Bitcoin. However, I am watching for the big breakout to the 65, 70K really, really soon. And so that's Bitcoin. Let's get into Ethereum. So Ethereum, look at that. Look at that. If you was watching the episodes about 2 weeks, I think we talked about it when, and let me just go to the weekly, is that when we were down here at this 16.73 area, I was like, look, if this can hold and we can push through, you know, it's on and popping to about 2,300. And at the time of recording this video, Ethereum is now at 2157. So if you bought down here when I mentioned it, you up right now. So as you can see, Ethereum chart is looking really good from a weekly perspective. As long as we close above this 2156, I think it gives us all signs to go to about 2300. If not, we could do one more retest of this 1944 level. I don't think we'll do it because, as you can see, we did get it this week, and buying pressure immediately stepped in and pushed the price back up. So therefore, our new support is going to be that 20,074, or I'm sorry, 2,074. 2,074 is going to be support. So if you want to buy, you could buy around this 2,074 with the expectation we run up to about 2,300. So that is Ethereum. And if you look at the chart on a daily, as you can see, looking really solid. I mean, just look at this structure. Every time it hits the bottom, we get a nice run. We kind of did some consolidation here, and now we're starting to break out. So Ethereum chart is looking really, really strong, guys, really strong. And so now that we went through our charts for the week, let's get into the actual chart of the week, which is going to be ARKK. All right, family. So we are now looking at ARKK. Been getting a lot of questions about ARKK, so I figured ARKK could be the chart of the week. Now, if we look at where we're at, 109 to 105 was pretty, you know, those were some great areas to get in when it pulled back. You had multiple touches at this 110 area where you really could have loaded up on ARKK. And 105 was that ultimate point. Now, I do want to just kind of show you guys where we have multiple close. So you had a close here, a close here, and a close here. So 117 is also another dynamic support area because we have multiple price actions. Now, that's not to say that ARKK is coming back down to those levels, because look what we have on the weekly. We have a hammer. So this hammer is signaling, okay, we should be ready to go back to the upside, as well as we've closed in similar areas of this before. So this 123 is a price that ARKK likes. So as we go into next week and the weeks further, what I'll be watching this for, actually, I would love to see ARKK push to about 130 this week, which puts us right at our 20-day moving average. And more than likely, I would like for it to push through this 130 and end the week somewhere around this 135, because that's where it looks like resistance is. So you had a open and then sold off here. You had an open and then sold off here. So 135 is ultimately that spot that I would love to see us get to. And if I just switch it up on the line chart so you guys can see it more clearly, you can see that, you know, this area right now is acting as resistance. And if we can pop through, ultimately, we don't have any resistance till we get up into this area right here, which is 132. And then you have this 137. So that's why I'm kind of aiming for 135. Like, I think 135 is a good target for ARK to kind of finish within either next week or the week after. And so that's what we really want to pay attention to for ARK. You know, with Tesla and Square getting ready to take off for a nice run, that should do well for ARK and push ARK, as well as a number of companies in ARK that are going to, you know, get ready to do some nice moves over the summer. So I'm still a believer in ARK. If you're in ARK, just stick with it, average down, add some new contracts, but the future is still bright for ARK. So as far as the levels to be watching for, that is what I'm paying attention to on ARK's chart. So that's ARK, guys. So it's now time to get into the lesson of the week, which is going to be all about the Fibonacci retracements. All right, fam, we're now going to get into Fibonacci retracements. So let me just put a disclaimer that with Fibonacci retracements, this is something that's based on how a trader likes to trade. So meaning, if you are like a day trader, you can use the Fibonacci retracement on smaller time frames. If you're a long-term trader or a swing trader, you can use the Fibonacci retracement on longer time frames as well. The key is that you need to identify the right high and low when you're using your Fibonacci retracement. And I'm going to show you a couple ways to do that in this video. Now, to anybody that wants to get into like more advanced methods of using the Fibonacci retracement, I would say check out the link in my description and check out my How to Read Charts for New Investors course. I go super in depth, and I give a lot of gems in my course. And so definitely check that out if you haven't. But for the purpose of today's video, I'm going to just show you two concepts that I use when it comes to the Fibonacci retracement. Now, for this example, we're going to use my boo, the SPY, which is the S&P 500. Now, when you look at this chart, you can see that we just had a nice run from about March 25th to April 9th, right? And so if we were to believe a retracement was coming, we want to know how deep of a retracement can we expect. Now, as I said, when using the retracement tool, you need to identify a high and a low, and that's how you can figure out your retracement. So I do it one of two ways. You can either start from the low and go to the high, or you can go to the high and go to the low. So let me show you how that works, right? So if like how I like to do it is I'll go from the low to the high, right? Like this. And then that kind of will show me, and if I zoom in, this will give me, you know, a perspective of, okay, how did it flow based on the Fibonacci? Like, how was the breakthroughs each level? So you can see here's our levels and like what did it look like, right? So we got a gap up in here. So we gapped up right over our 0.38 level, which is 401.05, and we kept going. Now, ultimately, if we got through this 411, the next level would have been 412. Now, we know we don't have enough buying pressure to push us to 419 yet because there's some gaps here, and we haven't really had any downside structure to support that bounce for the push. So that's one way that I can look at and use the Fibonacci retracement. Now let's figure out for the retracement, how low do we need to go? That's what I would do is I would then flip it, right? Now, let's say I'm expecting this move to happen by next week, which gives me the 16th. So in order to do that, what you can do is use a vertical line. You find your date on the calendar or down here, April 16th, right? And what I'm going to do is, because I have my low, which is about this 383, I'm going to take my Fibonacci right here, and I'm going to start at the top, and I'm going to draw my little arrow down to this corner of the bottom right here. So it matches with the 16th, and it gets me to my corner. Now, based on this right here, I now can see, okay, where could we possibly retrace to? Now, most traders know that 0.618 is a good level. Now, if we look at 0.618, where does that put us? 401.13, right in our gap, and tells us like, hey, this is our gap fill. 0.5 puts us at 397, which is where we had another little fuzzy area up in here where we might want to retest. So this is how I know, like, okay, where should I be basically aiming to get in on the retracement? So I have two levels. I could be looking at this 401.13 and basically just round down, say 401.400 and 397.83. So basically 398, 397 are the areas I should be targeting. And really, that's how you can use the Fibonacci retracement tool. It's really simple. So just in recap, because it's not going to be an overextended lesson of the day, find a high and a low, and then you can draw your Fibonacci from that high and low, and that's essentially how you can map out your levels. And literally, I could go through and I can change it to a weekly chart and do the same thing, right? So let's say this is the real move, right? If I want to say this is the low and this is the top from a weekly perspective, right? I could draw it up to here and say, okay, cool. You know, this gives me, again, my 0.23 is right at 401.89. You can see my 382 is at 396. And so all of the levels are still pretty much closely like aligned, right? I have my top at 421. I mentioned earlier in the video that I think by the end of the month, we could get to 420 on the SPY. So it's like, it's kind of validating everything that my technical analysis was telling me. If I want to do the same thing and do a reverse, I could do that too. I can start from the top. I know that this is the weekly candle, or this is my line here. So I go down to this bottom right here to line that up, right, with this bottom. And if I just spread this out a little bit more, just so we can see, you can see, right, that in order, if we were to retrace to the 0.618, our retracement will put us right at 396.42. And that is where we would ultimately want to retrace. Now, again, I don't foresee us getting down there on the SPY, at least not yet. But you can say, okay, hey, if we come retrace down to this full 3, which is at 0.618, then if this holds, and maybe we even dip a little bit lower, so you'll see like a wick, right? You might even get a wick up in here, and then we close here. That definitely signals a move to the 420, because we'll bounce off this this 0.78, and then we'll have room to keep going to the upside. And as you can see, our target, if it bounces here, would be 422. Once again, in line with our 420 target. Now, you don't want to get too greedy, and so that's why you use this as, okay, where should I be aiming to get in and get out and trade in between those levels, so that way you don't basically get caught being a pig and get slaughtered. And so that's the lesson of the day on how you can use the Fibonacci retracement. I hope I made that pretty simple. If you do have any questions, feel free to drop a comment below. As I said, if you want an even more in-depth explanation or how to use it to actually predict movements, again, the link to my How to Read Charts for New Investors course is in the description. Definitely check that out. So, hey guys, we're gonna go ahead and close this video out, and I appreciate y'all rocking with me.
All right, family, that was the episode for the week. So I truly hope you enjoyed that breakdown of the Fibonacci retracement tool, how you can use it and put it to work. I know you guys might still have some questions, so feel free to drop a comment down below, and I'll definitely try to respond as soon as possible. Now, on that note, I do want to add one last thing before we get out of here. If you see any other Zay the Wealth Strategist talking about Bitcoin or, you know, dropping those WhatsApp numbers in my comments, guys, just know that ain't me. I would never ask you guys to send me no Bitcoin or anything like that. So if you see those fake spammers, go ahead, report them. Let me know. So shout out to all y'all who have been letting me know. But just know, I want to let you guys know that ain't me. In the meantime, like I said, I hope you guys enjoyed this episode. Drop a comment if you have any questions, or if what you would like to see me do in the future. But hey, until the stimulus update video, which comes next Wednesday, you guys know the phrase. Stay blessed. Peace out.
Run it up, run it up, run it up. We out for generational wealth. Who else but us? Run it up, run it up, run it up. This is first gen wealth building. Who else but us?